Welcome to my November 2021 video newsletter. We have lots to talk about. We'll get to that after the stats. Here they go. As we look at sales in September, we had 19 in September, down 27% from the prior year. Of course, the prior year we were closing out all of our inventory. This year we don't have much at all, down 27% compared to that. What's notable is that the year-to-date median price of $655,000 is up 21% from full year 2020. As we look at new listings, we had 17, not by itself a bad number, but it is prior noting that it's not keeping up with the sales, so we're in for another inventory crunch, if you will. Third quarter, we finished a quarter, of course, in the end of September. You can see that where we were gangbusters in the second quarter, we're less than that in the third quarter. We've managed to now be behind where we were last year. I expect because of the low inventory, we'll stay behind. And then looking at active listings, we're 13, again, not growing by much. We're 54% under where we were last year. But on the other hand, if you compare to the prior years, as we've been doing, you'll note that October is really the peak month for all those prior years. We should be in the 75 to 80 range, so we're roughly running 80% under that number. As we look at the data, we see that as of the end of September, we're kind of on a par number-wise with 2020. It won't continue that way since we are running out of inventory and the number of pendings wouldn't support a big number. We're certainly going to close it under the 177 we had last year. The bigger story, of course, is on the price. Prices are up 20%, 21% above where they were last year, and I expect they'll stay that way through the end of the year. And so all in all, it's going to be an okay year volume-wise and a big year dollar-wise. So we need to, as we move forward, decide where we're going to go here. Until inventory catches up or at least comes back to some sort of normal, we're going to be in a supply-constrained environment. Prices will stay strong. Volume will likely stay low just because there is a bunch of, or a fair amount of pent-up demand. Now, other issues for this newsletter that we need to at least mention so you spend some time looking at them. One is the assessments. The assessments for 2022, if you will, are up almost 10%, 9.7 if I recall, from where they were last year. The good news is the tax rate went down. Although all your taxes will likely go up, the total X times Y will not be as bad as it could be. The other item, of course, is flood insurance. Just the beginnings of the new flood insurance called, I'm going to call it FEMA 2.0. Take a look at it. It's going to be, as it happens, which will be down the road a little bit, we'll see that I think many people will be surprised by either no change at all or by a dramatic increase in the flood insurance required. So anyway, those are this month. Stay safe, and I'll talk to you next month. Bye-bye.